After 15 years of handling money, making mistakes, learning from the rich, and managing investments, I discovered something shocking. The biggest reason people stay poor is not luck, it's habits. And today I will break down 7 bad money habits that are secretly keeping you stuck, and most importantly, how to break free. Most people believe that cutting expenses is the key to financial success, but there is only so much you can save. On the other hand, there is no limit to how much you can earn. The real mistake is not focusing on increasing your income. One of the biggest reasons people stay stuck financially is lifestyle inflation. The moment they get a salary hike, they upgrade their phone, move to a bigger house, or spend on luxuries. Before they realize it, the extra money is gone. They are back to square one. This cycle keeps them struggling no matter how much they can earn. The key to breaking free is to track your income, set financial goals, and actively find ways to earn more. People earning 10 lakhs or even 20 lakhs per year didn't start there. They upgraded their skills, negotiated better salaries, switched jobs, or built side incomes over time. The worst mistake is waiting too long to take action. There is never a perfect time to start, whether it's freelancing, learning a high-paying skill, or investing. The earlier you begin, the faster your income grows. Instead of just focusing on saving, shift your focus to increasing your earning potential. That's the real game changer. One of the biggest money mistakes people make is spending first and saving whatever is left, which usually ends up being nothing. Most people start the month by paying rent, phone bills, shopping, subscription, and weekend outings, thinking they will save whatever remains. But in reality, by the time the month ends, their money is gone and there is nothing left to save. Wealthy people do the exact opposite. They pay themselves first. The moment they get paid, they set aside at least 10% of their income for savings or investments before spending on anything else. This simple habit helps them build wealth instead of just living paycheck to paycheck. Many people believe they don't earn enough to save first, but the truth is, when you prioritize saving, your mind automatically adjusts your spending. You will still manage your expenses, but this time you won't end up with zero savings. Instead of making others rich by constantly spending on their products and services, focus on securing your own future. Automate your savings, make it a non-negotiable habit, and over time, you will see your wealth grow without even realizing it. Debt feels normal these days, but not all debt is good. The biggest mistake people make is borrowing money for things that don't grow in value, like expensive phones, vacations, or shopping. Many people swipe their credit card thinking they will earn cashback or rewards. But if they don't pay the full amount on time, they end up paying high interest, often more than 22%. This makes them lose more money than they gain. Credit card companies benefit from this because their goal is to keep people in debt. Another mistake is taking loans for things that lose value over time, like cars, electronics, furniture, or unnecessary EMI. These things depreciate, but the interest payments continue, making it a financial burden. The simple rule is, if you cannot afford to buy something in cash, it is better to wait rather than buying it on credit. Smart debt can help you grow wealth, like a loan for renting property or investing in business, but unnecessary debts only keeps you stuck. The best way to stay financially secure is to avoid loans that don't contribute to your financial growth. Clear your credit card bills in full every month and focus on building assets instead of liabilities. Debt can either work for you or keep you struggling. The choice is yours. Most people work hard to earn money but have no idea where it goes. They know their salary but they don't track their daily expenses. By the end of the month, they left wondering why their bank balance is so low. This is one of the biggest reasons people struggling financially. Not because they don't earn enough, but because they don't control their spending. When you don't track your money, small expenses add up without you realizing it. Subscriptions, online shopping, eating out, and impulsive purchases slowly drain your income. Lifestyle inflation makes it worse. The moment your salary increases, so do your expenses. A new phone, a better car, a bigger house. Before you know it, your extra income is gone and you are back to square one. The only way to break this cycle is to start tracking where your money goes. Set a clear budget, write down your earnings, savings, and expenses, and review them regularly. Even a simple habit of checking your finance every 3 months can make a huge difference. When you know exactly how much you are spending and where, you start making better decisions. People who track their money don't just save more, they build wealth faster and secure their future without feeling restricted. For many people, taxes are one of the biggest expenses after rent. At most, simply accept whatever is deducted from the salary without exploring ways to legally reduce their tax burden. Over time, this results in losing lakhs that could have saved or invested. The rich, on the other hand, understand tax saving strategies and use them to their advantage. In India, options like PPF, ELSS mutual funds, NPS, and tax saving fixed deposits not only help reducing taxable income but also grow your money. For business owners and freelancers, structuring income properly can lead to significant tax benefits. Many people don't realize that with the right tax planning, they can legally save a substantial amount each year. Not understanding tax rules means you might be paying more than necessary. Instead of ignoring tax saving opportunities, take the time to learn about them. The less tax you pay legally, the more wealth you keep for yourself. Smart tax planning is not just about saving money, it's about making your money work for you. One of the biggest financial mistakes people make is thinking, I will invest later when I have more money. But the longer you wait, the harder it becomes to achieve financial freedom. The real secret to building wealth is not just about earning more. It's starting early and letting compounding do the work for you. For example, if you invest 1 lakh at 10% per year, in 10 years it grows to 2.6 lakhs. In 20 years it becomes 6.7 lakhs. In 30 years, it reaches to 17 lakhs. The earlier you start, the more your money multiplies over time. But if you keep delaying, you miss out on years of potential growth. Many people hesitate to invest because they fear risk. But keeping all your money in a savings account is even riskier because inflation slowly reduces its value. Once you have basic savings and an emergency fund, start investing in mutual funds, index funds, stocks, real estate, or even gold. Even small amounts, 5,000 per month, can grow into a huge wealth over time. The biggest mistake is waiting for the perfect time to invest. The truth is, there is no perfect time, only now. The earlier you begin, the more your money works for you and easier it becomes to secure your future. Life is unpredictable. Job loss, medical emergencies, or sudden expenses can happen at any time. Yet many people live paycheck to paycheck without a financial cushion. When an emergency strikes, they turn to loans, credit cards, or borrow from others, which often leads to a debt trap. Instead of having control over their finances, they end up struggling to repay borrowed money, making the situation even worse. The best way to avoid this by building an emergency fund, a separate amount set aside only for unexpected situations. Ideally, you should save at least 3 to 6 months worth of expenses in a dedicated amount. This fund ensures that if something unexpected happens, you don't have to rely on credit or dip into your investments. Build an emergency fund doesn't have to be overwhelming. Start small. Saving even 10% of your income every month can help you reach your goal. The key is consistency. Once your emergency fund is ready, you can focus on investing and growing your wealth with confidence. Without a safety net, a single unexpected expense can wipe out all your savings. But with the right financial backup, you will have peace of mind and ability to handle crises without stress. Breaking bad money habits doesn't happen in one day, but small changes over time can make a huge difference. Steps like tracking money, saving first, increasing income, and investing early will change your financial future. If you found this video helpful, share it with someone who needs to hear this. Which of these habits is secretly holding you back? Drop a comment. I personally read every response. And do not forget to subscribe for more practical money tips. See you in the next video. Bala signing off.